The simplest chart pattern that I think every beginner trader should master. It's going to be an overview of the concepts, what to look out for, and then going through some charts as examples. I like to keep things really simple, so I'm going to try to go over this as straightforward as possible. Let's dive in. So the simplest chart pattern every beginner trader should master is the breakout pattern. It has to be high quality. We can't settle for low quality trades while trading in the stock market, whether you're trading shares, options. The chart itself will show you and demonstrate to you whether it's a high quality setup or not. So not all breakout patterns are equal. So let's go into this a little bit deeper. So the high quality breakout pattern has the following criteria. It's a clean pattern. So it's consolidating and it's resting slightly above the 20 moving average. It's respecting that. We're going to go over some chart examples to see what that looks like. The daily chart, which is something I have in front of me as I'm executing, I reference this whenever I'm taking a trade. The daily chart showcases the potential for a green expansion candle. We'll go over that as well in this video. Confluence. Now, confluence to me means, concepts or aspects of the trade on the chart that kind of combine and add to the quality of the trade. So because a breakout pattern, from how I view it, is a long bullish pattern, I'm specifically looking for high a day, prior day high, pre-market high. High day is my favorite to look out for because that confirms that the candle on a daily chart is going to be expanding or getting larger. And pre-market high is also really important. Prior day high, it depends on the chart itself. You have to have the daily chart really in front of you to understand this. But high a day and pre-market high are some of the confluences that I look for when looking at a pattern that's a breakout, that's resting above the 20 moving average, that's consolidating and has a potential to expand further on a daily candle. The last is multiple time frame analysis. Although I'm not covering it in this video, I highly recommend that you have multiple time frames in front of you as you're executing. This could be anything from the 5-minute chart, the 15-minute chart, the 1-hour chart, the 4-hour chart. When the market opens, if you're trading within the first 2 hours like I do, you're basically looking at what the other time frames are doing, and they should confirm your thesis that it's going to go long, that this breakout pattern should follow through, and there's no chance that it's hitting a resistance level and might reject, or it's very extended, so maybe this is not the best quality breakout pattern. But in some of the examples, we'll go over a little bit more about how I look at basically the execution time frame, which is the 2-minute chart, and the multiple time frame, what I'm looking for as well, to confirm that I should take this trade. So this is what a high quality breakout pattern looks like. It's also, from what I've learned, is the buy setup. It's referred to as a buy setup because there's 2 or more pullback candles, basically a doji candle, and then you can execute right about here. But because some traders that I see online consider this maybe like a breakout or like a flag, there are a variety of different names, but essentially it's breaking out, going above this pivot high. Sometimes I even consider this pivot right here a potential target 1, but overall it's a pullback, it's resting above the 20 moving average, and it's supposed to basically follow through, but it's not always going to do that. Sometimes, as I show you in another example, we have this pattern sort of consolidate a little bit longer, so it looks like it's tightening up, pressure is building up. So I'll demonstrate an example in this video as well. But again, you can sort of enter right above here, set your stop loss here. I like to usually enter a little bit earlier before the breakout happens, anticipating it a little bit once I get a little bit of confirmation that yes, we are seeing a proper bounce. But again, this could be a flag, this could be a buy setup, but I'm just gonna, for the purpose of the video, just call it a breakout pattern. Again, this is areas where I would take a buy, and potentially you can wait until the high day break here, as you'll see in some real chart examples, some of the trades that I have taken, that this is another entry possibility. As I mentioned, sometimes it does not trigger on the first time. Maybe it starts to retrace a little bit, and then you start noticing a little bit of consolidation happening. This is a traditional type of breakout pattern where there's pressure building up. The half of it right here is more of a buy setup or a flag breakout, but then when it starts to rest, you still have your stop loss there, so you wouldn't normally get stopped out. But again, it's riding above the 20 moving average. You have the buying opportunity here, or you have the buying opportunity here right at the highs. Again, with the green and the pink line here demonstrating where you would put your entry, where would you put your stop loss, or if you wanted to add in earlier, you can enter the the trade with a little bit of size and build into your position. Something that I like to do as well when I'm not 100% confirmed that this trade might actually follow through. But that's something I can go over in another video as well. This is what I mean here by a green daily expansion candle. What you want to look out for is if the candle starts to look like this, there is a potential for the candle to start going longer or appearing more green towards the upside. So this is what I'm referring to when I say daily expansion candle. The candle looks like this, but it has the potential to look like this. I'll show a real world example of what this looks like. So the QQQ chart here, you know, at one point this green candle was a lot smaller, and then because I'm looking at a time frame smaller than the daily, this is a daily chart. So if I'm looking at the 1 minute or 2 minute chart, and if I see an opportunity like a breakout opportunity, and I'm saying, you know what, it's above all of these sellers right here, there's a bottoming tail here, there's a little bit of a green line to showcase this is an area where I'd like to take it long. It's starting to already show a little green candle. I think this has a very high likelihood that it's going to expand. So this is a reference of what a daily expansion candle looks like. And I specifically use the daily chart because I'm looking at each specific day that I'm entering the market. I do reference the weekly chart as well, but the daily chart is really helpful for me because I can sort of see, okay, what's the potential for the first 2 hours to show me some sort of like expansion possibility. And every breakout pattern or long pattern that I take, I want there to be a possibility that I get a large green candle. If I don't have that possibility, you know, if it's a pullback day and it's slightly going to hit into some sellers here with this red candle, typically I'm a little bit cautious about that trade, and I may not even take it, in fact. This is another example with Tesla very recently. You know, there's consolidation and pressure building up, higher lows here, higher highs here. And as soon as it approaches this level right here, this candle here is an expansion candle. This also is an expansion candle, although it's just like another sort of daily breakout happening here. But again, this is what I want to see, or the potential to see on a chart. So if I go back again, I want to see something like this if it's already the market open, and I want to know that if there's a possibility for the candle to expand, that just confirms that the setup that I'm seeing in front of me on the 2 minute chart or the 1 minute chart, depending on what you trade, it's more likely to go ahead and move forward and be a successful trade. So here are some like real examples of trades that I have seen. I have been documenting all of my trading activity. I have been documenting all the quality trades that I see in the market. Most of them I take, some of them I just see and I'm able to take a screenshot of later. But this is an example of coin on the 2 minute chart very recently. What I like to see here is that the high a day is identified. I typically don't even trade the first 5 to 10 minutes of market open, specifically because there's a lot of noise lately, and it also helps me alleviate the issue with FOMO. So if I'm having FOMO, I found that, okay, you know what, maybe I should just stop trading within the first 5 to 10, sometimes even 15 minutes, because I want all the noise to sort of work itself out, and then I want to see clear patterns. So basically the high days right here, and you're getting some bullish price action going towards halfway of all of these sellers that came in with this red candle, and then you get this nice pullback, you know, 2 to 3 pullback bars, red colored, right above the moving average, and boom, you can take an entry here, put your stop loss right here, or if it breaks below the 20 moving average and the follow through is just, you know, super clean, that's exactly what you want to see. And the high day right here, in fact, gets slightly broken, and then it starts to pull back, consolidate, and then further follow through occurs. And that's really all I'm trading. I'm just interested in 2 to 3, maybe 4 or 5 candles. That's really what I'm looking for when it comes to day trading or scalping within the first 1 hour to 1 hour and a half of the market open. There's many examples that I'm going to be going through right now. I think I collected quite a few screenshots from all of my records. So we're just going to walk through them pretty quickly here. So again, high a day, it's sort of transitioning from going down here in the pre-market chart right here, and then it pulls back, buyer step up, some sellers come in with this red candle, buyer step up again. It's now holding above the moving average. I may look to take an earlier entry, breaking or anticipating the high day break, or if I want to see a little bit of pullback to see, hey, look, are we going to get some resting period here? It's still holding above the moving average, and then it just goes crazy. Next chart here is of Google. This one's a little bit more challenging, but I wanted to include this because of the pre-market high here. The pre-market high I usually include as a dashed line, and if it's a green dashed line, that's an area for me to go long. So immediately broke through that. looked like it was going to go follow through and then pulled back. I don't like to chase. I prefer waiting for a pullback, getting sort of that area where there's pressure building up right above this 20 moving average. High day has been noted down, and then boom. If I take an early entry, I can get stopped out right here, or maybe do it to the low of day. I think the low of day is a little bit far away, because if it's heading down here, it's more likely to start going against you quite a bit, so you want to get out. But take a look at this volume here. It kicks in pretty high, way above all of this volume. Now this is when buyers are mostly interested, and it's resting on the pre-market high, this green line. It's about to break the high day, so it's a really interesting trade and a good trade as well. Again, Google here, it's wanted to go above this pre-market high, which is the blue line. It did. It started to rest above the pre-market high as well as the 20 moving average. Sort of looked like a flag sort of breakout, and then as soon as you sort of see the high day get broken, the rest is history. It's just going towards a high. This is not the type of follow-up that I typically like. I just wanted to put in here, this is the type of follow-up you want to see when the stock is kind of like having a challenging time going towards the upside. So this is when buyers and sellers are basically paying tug of war here. I don't like to see this follow through, but if I have my stop loss down here on the chart, I'm still in this trade and I can still ride this, and the premiums still move as well as we trade options. Another trade here, this one broke out right around the pre-market high, so right off the open. I don't trade trades off the open here, but this is the pre-market high. You can see here that consolidation started to occur just about maybe 30 minutes before the market open. Actually, it's going back about an hour here because it's a 2-minute chart. So it started to consolidate pullbacks and starting to bounce above the 20 moving average. And then as soon as the sellers came in, the buyers stepped right back up, right around pre-market high, and it just went straight up towards the upside. So this one's one of those trades when you want to trade it right off the open. Again, with a breakout, you're looking for tight consolidation, holding above the 20 moving average, and you're looking for other confluences like the pre-market high levels or high day levels. Right here, this is sort of like a flag breakout. Again, it's building some consolidation above the 20 moving average. There's the high day, and then it just hits and breaks the high day. This, if you imagine this, is a green candle right here. And then when it breaks the high day, the green candle expands. And this red line here is basically an area where I would put a target. It must have been a prior target that I was looking at, and it basically reached and surpassed it as well. Right here, this is an interesting chart because you have the pre-market high, this dotted line. You have the high day over here. And again, I really do like the long trades, the breakout trades, when I have high of day identified. And some of these patterns are opening range breaks because you're within a range off of the open, and this is a high day break that you can consider as a breakout. This one is nice because there's a little bit of a pullback, 2-bar pullback, tight consolidation right above the 20 moving average, and then it just breaks the high day and then just continues further and basically goes what is this, almost 2-to-1. 2-to-1 for this trade, because I have a little bit of a dashed lines to showcase, this is the stop loss, this is the entry, 1-to-1, 2-to-1 right here. And as you can see, this is happening on almost all the tickers that I look for on my primary watch list and my secondary watch list. I have primary watch lists including Tesla, Amazon, Apple, Google, Meta, NVIDIA, and then I have a secondary watch list of like Coin, AMD, Circle, and other tickers that are not as high volume, but they also present good opportunities. This one's really clean because it is a pullback, kind of like the one we've seen in the chart earlier at the beginning of this video. And then we have the high day identified, and then basically you can enter early once the buyers step up and hold above the 20 moving average. That's one of the key things, because if it doesn't go above the moving average here, it's more likely to fail and continue further, going towards this sort of low pre-market low level. But again, you're holding the 20 moving average, you're starting to build more pressure. There's like a consolidation and sort of pressure building up here. You mark the high day, set your stop loss below this pivot, and then it just goes and breaks the high days and continue. And depending on your management style, you could take half off, you can take a third off here, raise your stop loss or keep it as is, or maybe move it to break even. But trade management is something I think is very personal to each type of trader. Some people like to take all of their profits off. Some people like to hold the entire position. For me specifically, once it hits high a day, I look at how the trade's doing. I look at how the option premiums are doing. If I'm up 30 cents, I move it to break even. Basically becomes a free trade. And if I get tagged, at least I took half off already. But again, from a chart perspective here, high day is clearly identified. You can enter here and basically it goes long quite a bit. So you almost get 2 to 3 on your money. Coin here, high day break. You know, this was looking originally weaker, but as soon as buyers stepped up and it closed above the 20 moving average here, that's a change in momentum. We're not as weak as we thought we were. It starts to go towards high day. I wouldn't take this trade at all because this is already extended up 2 bars and they're fairly larger bars. But as soon as you get to the high day, it pulls back. This is the opportunity I'm really looking at. And if I want to be a little bit patient, I want to see here, look, it's going to break the high day. There's clearly a line that I can develop and I can note down this is the high day. You can enter here, set a stop loss here. You can enter right after this red candle, set a stop loss below the red candle, whichever type of entry you prefer. As long as you can take back from this video that breakouts happen when there is pressure that's above the 20 moving average. If you combine it with a good daily chart that looks like it's going to go further green, and you have the high a day right here, or you have a pre-market high, your trade just becomes much more higher, has a higher likelihood of succeeding. And the cleaner the chart, the more obvious it is that it will succeed, because these type of really clean, perfect patterns, they don't often fail. But again, always have a stop loss because you could be wrong. Usually when I combine the high a day with a breakout pattern and a daily chart looks really good, I typically see about 75 to 90% success rate on those specific trades. Again, one concept that I didn't include in here is the volume. You want to see volume that gets quite enhanced. So you want to see igniting volume right here. So as you can see, the volume is a little bit slow, and then boom, as soon as this candle hits, because that's where all the buyers are stepping up. That's where a lot of the volume is kicking in, and it breaks to the high day. Okay, next chart here. Again, this is going up, starting to hold the 20 moving average. You can take an early entry here, but again, I'm interested right here. And this is where I'm looking at, because we sort of peaked through the original high a day, started to pull back. Now this is the new high a day, and we're building that consolidation again. And with Meta is quite volatile. It takes quite strong moves against you and in your favor. So you want to make sure you're definitely really clean above the 20 moving average. You create a line here. I think this blue line here also signifies it was an area I was looking to go long. So a 768 whole number, and whole numbers combined with this concept also add value to the trade. And look at this candle right here, low volume, and then boom, igniting volume right here, and it broke out and actually continued a little bit further towards this blue line. And this blue line on my charts is basically target 1. So it got really close and then pulled back because obviously profit taking was occurring at that time. This one's interesting because there's a pre-market high and a high a day. So I'm looking at the high day. I could even buy this really early. It's resting nicely above the 20 moving average. Some folks might look at this and say, hey, look, I like this area. I think this is going to go long. That's another option. But if you look at the high day here, again, it gets broken. And then the pre-market high also gets broken, and then it continues higher. So again, looking at the pattern, having the daily chart, adding a pre-market high, or my favorite is high day, and breaking those levels so that you know that you're confirming that a trend is going to follow through and is moving further in favor in your direction. Because in the past, I used to trade like reversals. I used to try to buy the bottoms, short the tops. I've done that every now and then recently, but to be honest, they're not very high success rate. They're much more stressful, and there's really no reason to trade them anymore. So why not take patterns that are higher likelihood to succeed and going in your favor. This one's a little bit overlapping. You know, I don't like too much overlap in the pre-market, but as soon as we broke the pre-market high and the high a day, it started to follow through. It's pretty simple right here. Again, high a day, a lot of noise here, a lot of pulling back. You can draw a line here to show some sort of like flag breakout. But again, high a day right here. When it breaks, it confirms that it's continuing, and it continues further. Tesla over here, it was originally looking weak, started to go down, reclaimed the 20 moving average, started to move above, pulled back nicely. I like this pullback because it kind of looks what I would see in like a demonstration for how the candlesticks in theory should look like. So it's 2 or more pullback candles that are red, and then it starts to show this green candle showing that buyers are stepping up. It's transitioned, and basically it's going higher. Now, the interesting part is high a day, there's another trade opportunity because it pulls back again. You can set your stop loss here and then enter here, and then it breaks the high day and actually follows through pretty nicely. This one, again, this is like your opening range breakout. There's a lot of consolidation, and you're seeing the high a day and you're seeing a low a day, but the high a day does get broken, and there's some pretty good follow through right here on Microsoft. Again, I hope you guys get the point here. High day gets drawn out. This is like a flag breakout. You can see like a triangle shape with a pull. And this right here gets broken. High day gets broken. There's some follow through. The key thing with these breakout trades that I personally look for is a good risk reward. Because if you think about entering right here, anticipating the high of day break, and you put your stop loss here, this is your 1-to-1. Automatically when you break the high day, you already make 1-to-1 on the trade. And then when it follows through further, that's when the premiums on options go a lot higher. Or if they're trading shares, that's when you're trying to get 1-to-1, 2-to-1, 3-to-1 right here. This is a nice pattern. Again, you can wait patiently for the buyers to step up above and close above the moving average. This right here was not that. We're not closing above the moving average. Even this one, once we close above the moving average, it's quite a strong move, almost about 100%, maybe 60, 70% of this previous move down. So I would wait a little bit for some consolidation, and then it's above the 20 moving average. There's a high day right here. And I usually put an alert saying, hey, this is the high day. This is where I'm looking to take it long. I might anticipate it, or I might get it right when it breaks it, right down to the penny. But again, high day right here, it breaks it, follows through. Another one on Microsoft here. This one's clean because you can draw the line on this pivot once the price action starts to go in your favor, but you're not yet in the trade. Always be patient, wait for a pullback, see how it handles the 20 moving average, and then you might even see something more satisfying like a high a day line that you can draw out, and then basically wait until the very last moment when it pops, take a quick scalp, and move on to the next trade. Another one here on Circle. This one is a buy setup technically because it moves up, pulls back, holds really nicely. Like this is textbook stuff, holds really nicely above the 20 moving average. You can take this buy setup by setting an entry here, putting your stop loss just below the low of this, but I like the high day break. It's a little farther away, so I would probably wait, knowing how much of a move from 113 to 130 it already did, right? So that's quite an extended move. So I'm not too confident in even taking this because the target would be the high day. But once we start to get into the high day, we start seeing a better pattern, and it's still holding the 20 moving average. Sellers aren't creeping in too much with these shorter red candles, and then enter right here, your stop loss just below or even below this pivot, just if you want to give it more room. And then boom, you got a quick little move in your favor, and it has a possibility for you to raise your stop loss here. And if it tags you, you still walk away with some money. This one's interesting because there's a pre-market high, there's a high day. As soon as it starts to sort of consolidate right below the high day, peek a boot a little bit, you might be in this trade a little early, but again, if you have your stop loss below this red candle, you're okay. And they're still in the trade, and then it pops and it continues further. And I think this is supposed to be a blue line, but I have it as a purple line. This would be potential target that I had. I do my targeting where I look to enter, where I look to exit, where I want to go long based on the daily chart and intraday chart. So I already have that set up before I even take the trade. Okay, so those were quite a few slides, but the concepts are really simple. You're looking for a pullback, you're looking for some sort of consolidation, you're looking for a high day, you're looking for a daily candle that shows you that the trade is going to move in your favor. And by waiting patiently, not getting in too early, not trading reversals or bounces or shorting the top, you're basically going in the trend of the direction. And that's what basically a breakout is. It could be a high day breakout. It could be a pre-market high breakout. It could be sort of like a pullback and then breakout, like a buy setup. It could be a flag breakout. So there's a variety of different ways to approach this, but it's probably the easiest long pattern that you want to look out for. If I'm not mistaken, the stock market 70% of the time has bullish days, so might as well just go long most of the time unless we're going into a bearish market. In the near future, I'm going to be putting up a video of similar slides but going towards the downside, and a very simple pattern you can look for towards the downside with chart examples, with the whole theory behind it, what to look out for. But I have a question for you. Do you trade with confluences such as high day or pre-market high? If not, do you have other confluences that you're looking for? Let me know in the comments below, and I hope you gain value from this video.